There's a $12, and it's growing, an arbitrage in China.
Yeah.
Shanghai is offering $12 an ounce more, thereabouts, per ounce than silver. For silver, than we see it in the West. So if you're a trader, you can, if I give them 10 million ounces of silver, buy paper here and deliver it in Shanghai, well, that's $120 million. Done. That's what they're doing. And that arbitrage is that sucking sound, if you listen, that's their way of saying, be dumb enough, please. We're sitting on all of your dollars through the trade imbalance. Please be dumb enough to give us your silver, and we'll pay you handsomely for it in your dollars that have the retaining value of a melting ice cube, where they're continuously losing value through irresponsible fiscal policy. And so you have, for example, China right now is expanding their Shanghai Metals Exchange throughout the entire Belt Road Initiative, using local currencies, all these nations trading over Enbridge or CIPS, the Cross Interbank Payment System, both of which are not compatible with SWIFT, and they're settling imbalances in gold. Now think about this. China just signed up the ASEAN nations. These are the countries in Southeast Asia who represent China's largest trading partner by far. There's 800 million people there, twice the population of the US, 30+% of GDP. They're now signed up to CIPS and Enbridge, which means all of the trading won't go through SWIFT. It'll go over other channels that SWIFT isn't compatible with in their local currencies. And imbalances are settled in gold. In other words, instead of when it had to be dollars, well, that supports the dollar strength, right? And when you have all these dollars to conduct trade, you put the reserves, instead of leaving them earning nothing, you put them into treasuries, which are very liquid, which give you a return. So that supported and kept rates low and kept asset prices high, right, in the US. So what if they say, well, we don't need dollars anymore, we trade our own currency, building our monetary system instead of that of the United States, better be smart about it. And then instead of holding treasuries to put reserves in, we put it into gold, which has doubled the performance of the Treasury for 25 years. Look at the last two. 2024, gold was up 40%, the 10-year Treasury up 4.5%. Last year, 10-year Treasury up 4%, gold up 80%. The point of it is that it can't be weaponized, can't be taken from you. It's outperforming it, has no counterparty liability. And these countries have had it with the U.S. and our monetary policy being at the end of the barrel of a gun instead of cooperation. And that's what the BRICS are. It's all voluntary. The Shanghai Cooperation Organization, all these countries are doing so because they see a way away from the hegemony of the United States and their safety in numbers, and it's happening. It's growing. And you're right. That's what started the ball rolling. In every interview I've done with you for the past 5 years, we've talked about BRICS and we've talked about the international demand. And through all of that time, it's never spilled over to the U.S. until now. For the last 15, 16 months since he won the election, Trump, honest to God, Charlotte, the amount of gold and silver coming into COMEX is like, honestly, it's 4 feet of snow in Death Valley. And you're not going to see snowmobile dealerships spring up in Death Valley if that's the case. It's an anomaly. Or is it? Is all this being reshored? We thought it was tariffs. I said, no, it's not tariffs. It's reshoring. It's reshoring. They're lying to the other banks. It's the only way to get it back. These banks have been in collusion with each other for 50 years, and the primary way they would do it is they would short in New York, which would drive the price down, and then take a corresponding long position in London, which doesn't affect the price but makes their books neutral. And they would trade back and forth either with real metal or what's called warrants. I own it, no, you own it. No, I own it, you own it. Just a piece of paper that showed ownership. And they would never really, it was capping the price. And now Trump comes in and they say, it's tariffs, it's tariffs, it's tariffs. Send the metal back, we need to cover it. Don't worry, it's just one way it'll come back. It's not going back. They are reshoring. We've become a net importer of gold. We've been a net exporter for 50 years. And whoever is bringing in record after month, record every month, huge amounts, billions and billions and billions. I will just simply say, if you have billions and billions and billions and billions of dollars, you are also very, very well connected. And they know where this is going, or they wouldn't waste their time, their money, or do things that are completely non-conventional. Or are they? Are things just changing? And I would argue they are.
You emphasized right at the beginning of this conversation, as we're going forward, we can have ups and downs in gold and silver prices. The overall trend is up. Is there any realistic bear case for the precious metals at this point?
Not unless we see a massive new rush of supply that is found somewhere. Because it's all valued in dollars. And what is the bull case for the U.S.? And it is the speech I'm giving tomorrow is talking about the U.S. wanting to shed the reserve status. It's something called Triffin's dilemma. We are a country, Ray Dalio just gave a speech and he said 60% of America has a literacy rate under the 6th grade. Okay, we're dumb, we're uneducated. We don't make anything anymore, no manufacturing. We're $200 trillion in debt. Well, that's not a good recipe, and no one trusts us anymore. So what do? Triffin's dilemma says that you will never have a trade balance positive if you are the reserve currency, because we can't give the world enough in the way of dollars through trade alone. So we have to export our dollars to the world, which means they have to sell their currency in the open market to buy ours, which creates an inequity over time. The constant selling of their currency to buy ours, to buy oil and to do things, creates a situation where manufacturing is hollowed out and flows to countries like Cambodia, Vietnam, Korea, China, whose currency is way lower than the dollar. And so it's way cheaper to make stuff. And because of that, and then with all those dollars they have to put it in treasuries for the reserves, right? So the combination of all that has given us cheap goods at Walmart, has made interest rates very low, making asset prices high, and it's coming to an end. And it really is. It is coming to an end. That exorbitant privilege is over. And I believe if there's any nobility in what President Trump is trying to do, is to reshore manufacturing. How do our children or grandchildren in the United States have a future in a country where we're broke, insolvent, uneducated, don't make anything, and just in time comes AI to kneecap entry-level jobs? My son was an accountant. He works for me now. He was an accountant at Price Waterhouse. He was getting paid $80 grand a year out of college to analyze the balance sheet of a real estate investment trust, getting paid from one of the biggest accounting firms in the world and getting paid benefits and all that stuff. AI says, boom, done. What do you need a 4-year-old kid to do this? You don't. And these jobs are going to disappear. What you see is a K-shaped economy. The wealthy get way wealthier through massive efficiency at the expense of millions of jobs. How do you put people to work? I honestly believe that is what they are trying to do, to massively devalue the dollar in order to reshore manufacturing. Now, there's a lot to it, right? It involves the Genius Act, which goes into effect January 1st of next year. And it involves what Judy Shelton has told me twice on my show, who was Trump's nominee to run the Fed in 2016. Brilliant woman. You should have her on your show. Brilliant. She wrote a book as good as gold. And she says he told her, Trump did, and on no uncertain terms, that July 4th of this year, which is the 250th anniversary of the country, he will back the back end of the bond market to gold. In essence, that gives you the ability to issue zero coupon bonds redeemable in gold. Now, the Genius Act, which after January 1st says anytime money moves, will be backed by stablecoins. The Clarity Act just said the interest on the stablecoins is not transferable. So let's just play this out. I owe you $100. I send you, like Venmo or Zelle, but now money, I send it to you. When I send it to you, the stablecoin is created. When you receive it, the stablecoin is burned, gone. Backing the stablecoin are short-term treasuries up to 90 days. The interest on that treasury is not transferable to you or I. Who keeps it? The issuer. USA Tether is one of the primary beneficiaries of it. Their CEO is now Bo Hines. He was Trump's crypto czar through August. So what are they doing with all of that interest? Well, Tether has bought $14 billion in gold already, this largest holding in the world next to sovereign nations. So what does that do? Remember, Triffin's dilemma says all these countries are devaluing against the dollar, so measuring your dollar against the dollar index is measuring it against a melting ice cube. They're all devaluing. It's a faulty measuring stick. Measure it against gold. That is what Roosevelt did when he confiscated gold in 1933, paid everyone $20 or $20.67 for their $20. 67 cents was a lot when a dozen eggs were a nickel back then. And then he devalued the dollar by 40%, just like that, making gold 35. They want to devalue the dollar to be able to sell manufacturing to the world. You can't sell it at a high dollar. So you devalue the dollar, you shed the reserve status, you default on it quietly, right? And by continually, anytime money moves, it's backed by treasuries, which are non-transferable, the interest. Tether buys gold. Gold goes higher, higher, higher. Van Eck funds, not James Rickards who says 24,000, not Mike Maloney who says 10,000, not me who says anything. Van Eck funds said if the dollar loses its reserve status, which I believe we will, gold will go as high as 180,000. Now let's play that out. This is Van Eck, right? A mutual fund company. Let's play this out. If you sell a bond to the Chinese to bring back manufacturing, right? You sell a bond to anyone to bring back manufacturing, to rebuild your manufacturing in the United States with zero coupon. That's what Judy Shelton says is going to happen. Zero coupon, but redeemable in a fixed face value of gold in 20 years or 30 years or however long. And I sell it to you at $5,000 an ounce on 20 million. That's a lot, right? It's 4,000 ounces of gold. But what happens if Van Eck is right and we shed the reserve status and gold goes to 180,000? That just means I have to pay you 300 plus times less gold at 180,000 bucks an ounce to in 20 years to pay off that bond. And as gold goes way, 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 way higher, the dollar goes way, 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 way lower. So we devalue the dollar, got to reshore the gold first. Oh, what do you know? We've become the largest importer in the world. Quietly, right? No, it was to cover the shorts. It was arbitrage. It was tariffs. Bull. It wasn't. It was reshoring. It was lying to the European banks because there's no other way to do it. So all this gold comes back. You let the price go higher, higher through the movement of money synthetically, creating demand for the front end of the curve. You peg the back end to gold, and as the higher the price goes of gold goes, the easier it is to pay off your debt, what you used to bring back manufacturing, into a wickedly devalued dollar. Now you can sell your products to the world like they've been doing to us. I believe that's what he's doing. He can't tell the world that, or it would never happen. There is nobility, I believe, in what he's trying to do. If not, Charlotte, you live in Canada, I live in the U.S., my kids and their kids are doomed. And I don't, this isn't hyperbole. This isn't being dramatic. How do you become or retain any legitimacy when you are wickedly insolvent, you are wickedly uneducated, you make nothing, and here comes AI to kneecap everything. So the wealthy get way wealthier and the poor become way poor. This is Klaus Schwab saying you own nothing and be happy. I mean, it's scary as hell. There is no other way to do this, but in my mind, but to default on the reserve status, and I think that's what they're doing. Bottom line, you save in dollars, you'll go broke. You're not a contrarian, you'll be a victim. And I mean that sincerely, 100%.
I think it's really clear just from what you've laid out, the direction this is going. And I think I should probably let you wrap it up and get back out onto the conference floor unless you had anything final.
Well, no, it's all good. My voice is starting to fray.
Sorry.
But no, it's all good. I always do this to you. I don't mean to do it. I'm very fired up about what I do, and I very impassioned by it. And if I have any talent, it's being maybe to connect dots. When I started talking to you and others 5 years ago about the BRICS, everyone thought I was insane. And then what do you know? The BRICS are mainstream now. Say what you want about them, they're growing. And maybe I'm stupid to say it or brave enough to say it. I don't know what it is, but I believe in my soul this is where we're going. And it is not to talk my book, right? I mean, I've done this a long time. I don't need to do that and ruin my family name, my company name, and embarrass myself. That is not why I'm saying this. I'm saying it because no one else has the courage to say it in the mainstream. And you don't hear anyone else saying it in this industry. Some of it, not all of it. I believe it, and I'll stick by it. And if I'm wrong, I'm sorry. I try hard. I spend 3, 4, 5 hours a day, every day reading, and everything I see tells me that this is the direction it is going. We can't continue down this path, or our kids have no future. Zero. We used to be the engine of manufacturing and of trust, this moral high ground which we've trampled on. And I think that these changes have to happen, and either you roll with the changes and accept them, or think that normalcy and recency bias prevails and get rolled by them if I'm right. And if I'm wrong, so be it. I apologize, but nonetheless, I do believe in my soul. This is right now. It's moving so fast. right now that either you understand it and dip your toe or maybe jump in with both feet, or look back and say, damn it, I wish I would have done that, because nothing good lasts forever. Things change, and hopefully this will. Look, one last thing and I'll shut up. My mentor, Richard Russell, used to say 20 years ago, the Fed has two choices but to inflate or die. Inflate or default. This is option number 3. Soft default on the reserve currency to bring back manufacturing, to have the ability over time to grow our way out of this problem and become a more mercantile nation where we take care of ourselves rather than a globalized one, which isn't working anymore. And if we don't, God help this country, the United States, or we're in big trouble in the next. If we're reliant on the rest of the world from aspirin to aircraft parts, what does that do? We have to make stuff, and that's what this is all about.